Quebec just announced an unprecedented rental increase. Stay tuned and I'll explain how this is impacting the Montreal real estate market. Our market has seen its fair share of changes over the years, but it is still a good place to invest in 2025. With market trends evolving, rental demand surging, and new policies shaking things up, let's dive into why Montreal remains one of Canada's most exciting cities for real estate investment. Hi, I'm Aguinaga with LJ Realties in Montreal. With years of experience in the dynamic market, I've seen trends come and go, but I'm here to break down what's happening now and what it means for you as an investor in 2025. In this video, we'll make sure to cover all the latest market updates, how new developments are impacting investors, and the pros and cons of investing in Montreal real estate this year. Let's start with a basic Montreal market update so we can identify the trends and where prices are heading. Keep in mind that Montreal's real estate market in 2025 is expected to be as competitive as ever, driven by strong demand. On the island of Montreal, the average multiplex price remains lower than other major Canadian cities like Toronto and Vancouver, making it an appealing market for investors. However, prices have continued to climb with a year-over-year increase of 6% and a median price of $820,000. Unlike the rest of Canada, rental demand is soaring due to population growth, driven by young professionals and students flocking to the city. Vacancy rates remain low, hovering around 2.1%, creating a landlord's market. On top of this, the TAL has awarded landlords a 5.9% increase on their rent. This is a huge and unprecedented increase. For context, if the property is generating $36,000 in revenue, you just increased a minimum of $2,124. This is huge. Many buyers are shifting their focus to multifamily properties as they offer higher returns and more stability compared to single-family homes. I always say, you're best to spread out your risk over many tenants. If you buy a fourplex and one tenant leaves, that's only 25% of your revenue. But if you buy a single-family home to rent and one tenant leaves, that's 100% of your revenue. Now, let's move on to the impact of new developments and market shifts. Montreal, known for its continuous construction, is undergoing significant transformations that are shaping its real estate landscape. There's been a lot of investment into the city's infrastructure, namely the new metro extensions and redevelopment zones are driving interest in certain neighborhoods, leading to higher property values. Areas like the Blue Line metro extension and anything close to a future REM station are hotspots to watch. Investors are becoming more selective, focusing on properties with strong rental potential and long-term appreciation. Look for neighborhoods with growing amenities and connectivity. Everyone is searching for community now more than ever. And last but not least, let's talk about some of the pros and cons of investing in Montreal real estate this year. Let's start off with some of the pros. Montreal remains one of Canada's most affordable major cities for real estate. The low vacancy rates mean consistent cash flow for rental properties, and with the new rent increase policy, landlords can adjust rents to reflect inflation and rising costs. Montreal's thriving tech and cultural scenes, coupled with the 4 major universities, attract young professionals, ensuring steady rental demand. And now for some of the cons. Increased interest from local and national investors makes it harder to secure the best deals. Due to the age of our city, many properties in Montreal require significant maintenance and upgrades, which can add to costs. As landlords, we are at the mercy of the TAL, our rental board. Quebec's unique housing laws can be complex for new investors to navigate. Now, the most important part. Without tenants, there is no profit in real estate. So now I want to talk about the rental market update. Rentals in Montreal are booming, and here's what you need to know. Due to recent inflation, the TEL awarded landlords a minimum of 5.9% increase in rents. This will allow every pro forma to look a lot better and provide more opportunities. This makes Montreal a standout province for rental property investors this year. Montreal's growing population and affordability compared to other cities are fueling high demand for rentals. We also happen to have an awesome city. We're a little big city in the sense that just about everything is a maximum of 20 minutes away. That being said, units near public transit and universities are particularly sought after. If you own rental properties, this is the year to evaluate your rents and consider adjustments to align with market trends and the new guidelines. So, is Montreal still a good place to invest in 2025? Absolutely. But like any market, it requires strategy and preparation. From rising rents to new developments and infrastructure projects, the opportunities are there for those ready to act. However, just like any other market, there are going to be bad deals out there. So you really want to make sure you surround yourself with the right team to support you and make sure you get one of the best deals on the market today. If you're looking to get started or expand your portfolio, reach out to me and my team at LJ Realties. Don't forget to like this video, subscribe to the channel, and share your thoughts or questions in the comments down below. I personally respond to every single one of them. Let's make 2025 your most successful year in real estate.